Hey guys, it's Rahim. Welcome back to my channel. If you're new here, smash the subscribe button because I talk about property investment, personal development, and how to gain financial freedom. In today's video, I'm going to share with you the 5 important facts of investment properties that nobody talks about. What I'm about to share with you would help you save tens of thousands of pounds before you even start your property investment journey. For those who don't know me, my name is Rahim. I started my property investment journey just over 8 years ago. I was in a job where I was undervalued, underappreciated, working seriously long hours and going nowhere. I took the leap of faith to start my property investment journey by renting houses from landlords, and I subsequently rent these houses out on a room by room basis. The profit I made from those houses I used to start buying my own investment properties, and I was able to build that to a multi-million pound property investment portfolio, and I subsequently have my own estate agency, renovation company, and I now help professionals to use my tried and tested method to make recurring income through investment properties. So I hope that earns me the right to tell you the 5 important facts about investment properties that the property gurus do not tell you about, so you can join their investment program. So let's get to it. But before we get, I'd like to thank everybody that subscribed to my channel. My channel is growing immensely. Thank you, and I appreciate you so much. And if you're new here, please smash that subscribe button to join the family. It would only blow your mind away. So I hope you've done that. Thank you. Here's a promise. I will provide you valuable, actionable content to help you get a little bit closer to financial freedom, or perhaps to get you to financial independence. So thank you so much for doing that. Let's get to it. So what are the 5 important facts about investment properties that people do not talk about? The first thing is hidden cost. Most people overlook hidden costs associated with their property investment. This could include renovation costs. Okay, people underestimate their renovation cost instead of increasing the renovation cost. They may not look into some other stuff that they need to do in their property, and obviously that is hidden. Nobody talks about it. Just get you to buy the houses. Literally, it becomes a problem. Or maintenance, for example. There is maintenance to help your property keep going. And we have repairs. We have property management fees and unexpected expenses. So here's the thing. These are the hidden things people don't tell you about. People just get you to buy the houses, or you can buy a house like this, do that. They don't tell you about these things. So if you're not budgeting, or if you're not aware about this sort of cost, it will land you in hot waters. And it is crucial to factor in these costs to ensure your investment property remain profitable. Here's what I tell my investors is to underestimate your income and overestimate your expenses. Because if you go lower on your expenses, it would only bring you literally lots of good surprises. Number 2, time management. You know, people talk about, whoa, property would make you passive, recurring income. I get that. It's not entirely passive income. Owning an investment property can be time consuming. For example, when you bought the property, you need to do the renovation works. You're not physically doing the renovation works, but you need to manage your builders. You need to buy the materials. You need to do all that sort of thing, because obviously if you leave it with the builders, they'll go and buy expensive materials for you and then whack a margin on it. Then it becomes a lot more expensive, and then you start struggling about whether property worth investing. So you need that little bit of time to get that going. You do not necessarily need to spend your whole day in it, or you don't need to necessarily spend the whole week on it. But when you need it, you are in standby to help get you a little bit closer to achieving your goal. And perhaps you may need to manage your tenant. Suppose you've got one property or maybe a couple of properties, you might want to manage it because it's not a massive thing to do. So if you're managing that, then obviously, as you know, it takes a bit of time. Okay, it might not take lots of time like the hours that you spend at work, but it is a bit time consuming, especially if there is a repair works to be done, or especially they are complaining about something else. You need to leave something to do that, to resolve that issue. Handling maintenance issues, for example, and dealing with property management agent. And because sometimes there's something that needs to be happening in your property, they will have to contact you to kind of approve some stuff. And sometimes the management agent are not the best agent out there. Okay, they may be messing you about, and you have to be going back and forth. All that is time consuming as well. And even with a good property management agent, you still need to oversee the management of your properties to ensure your investment is protected. Here's the thing, if you don't look after your properties, nobody will look after it for you. If the agent know, look, John doesn't care, guess what? They will not be care. But if you show caring, if you show commitment in your properties, guess what? The agent will be like, you know what? This guy's not gonna mess about, okay? We need to ensure that we look after his properties. So these are the things that you need to be aware of, okay? The third one is market volatility. Whilst investing in property often is stable investment, real estate market could be volatile sometimes, especially during economic downturns, changes in job in your local market, or shift in population growth can impact your property value as well as your rental demand. Although it's not as volatile as other industries like the stock market, like cryptos or commodity market, it's not as volatile as that. It takes time, okay? It takes time. But however, it also impacts your property, impact the demand, impact the supply. So for example, if you have a big manufacturer or an employer in your investment area and all of a sudden they are laying down staff or they are closing that business down, it impacts your property because your tenant may be working in that factory or in that business. So obviously, if they are not working there anymore, they're made redundant, they may not be able to afford to pay your rent. They may choose to move elsewhere where there's a job. And again, if they move out elsewhere, there will not be that much demand in your investment area again. So that means rental demand goes down. And when that goes down, obviously, the value of your house would also go down in parallel. So understanding and preparing for these market fluctuation is essential for long-term success in the property investment world. So know that, understand it, literally learn about it to know what would happen with your property in a worst case scenario. Now, we've talked about the doom and gloomy about property investment that nobody tells you about. Let's now talk about the benefit. The number one benefit for investing in property is cash flow. Cash flow is one of the significant benefits of property investment. It is the potential positive cash flow. It is the rental income that the property provides you as a steady stream of income that would help you cover your expenses and generate profit. So what is cash flow? Cash flow is the gross rental income. Suppose you are a tenant right now in a property where you're living in. The rent you pay to your landlord is what we call the cash flow. Gross cash flow is the revenue, is the money the landlord makes from renting their property out. So once you've paid that rent to the landlord as a rental income to them, they would have to pay their interest payment if they've got a mortgage on the property. They would have to pay their management fees if an agent is mismanaging it, repairs if there's any repairs, and then obviously they've got insurance and other stuff that they pay for their property. So they deduct all those expenses from your rent, and whatever is left over is what we call a net cash flow, and this is what we call recurring income. So in essence, when you buy a property, you do all the works, you put a tenant in there, it gets you to make that money every single month with a minimum time and effort into making that money. So in essence, you'll go to work, still make that money. You can go to holiday and make that money. You could spend time with loved ones, still make that money. So it is irrelevant to what you do. So you still make money every single month. And that's a massive benefit for investing in property. And the returns are really, really good. If you know what you're doing, in minimum, right, you should be making £300 in any rental property. If you're making less than that, you may want to look at your figures, or perhaps try to re-strategize wisely to ensure you're making more than that in your investment property. Again, this is subject to the location of where your property is at. If you're living in London or you've got properties in London, maybe you're looking at £600 or £700. So depending on the location as well. But if you're not making that much money, you might want to reconsider your strategy or get someone to guide you, mentor you to help you ensure you're making at least over £300. The fifth hidden fact about property investment, which is the one I love it so much, I can die for it, is capital appreciation. In the UK, over time, property value tend to increase, providing capital appreciation. This long-term growth can significantly increase your wealth, especially when combined with regular rental income. So here's the thing. In average, property prices goes up by 8 to 15% in the UK. This is regardless you're renting the property or not. This is the benefit of owning a house in the UK. Suppose we bought a property that worth £200,000. Okay? So that property would go up in value in average, let's say 10%. If it goes up in value 10% a year, you're talking about £20,000 just for owning a property in the UK. Imagine then also having rent every single month. Suppose you're making £8,000 a year net cash flow from your £200,000 property, and that property went up by 10%. Right? Your 20,000 add 8,000, you're talking about £28,000 a year. This is one of the beauty for investing in property. So here you have it. These are the 5 facts of investment properties that lots of people do not talk about. If they talk about, they only talk about the benefit, not the disadvantage. I hope this video has been helpful. If this video has been helpful, smash the like button below, subscribe to my channel for more amazing videos. I look forward to sharing the next one.